What's going on, y'all? Welcome back to another dope edition of Define Your Legacy. I'm your host, Elijah McBee. And before we tap into today's episode, just want to shout out our online store, which can be found in the link in the description of this episode. All right, we have t-shirts, long sleeves, hoodies, and a whole lot more. So make sure you check it out and can be found in the link in the description of this episode. All right, but to tap into today's episode, all right, we have none other than Miss Adrienne Davis. How are you?
Hi, doing well. How about yourself?
I'm doing well, doing well. Thank you for asking. So if you could just introduce yourself and tell the world what it is that you do.
Yeah, so I'm Adrienne Davis. I'm a certified public accountant, and I'm also a financial advisor. So I essentially help high achievers achieve financial wellness, build generational wealth, and have a better understanding of their finances as they're preparing for retirement or whatever life goals they have.
Okay. And how'd you get started in this industry?
Yeah, that's a good question. So originally I worked for a public accounting firm and I did taxes for businesses as well as high net worth individuals. And one thing I learned working with the high net worth individuals was how they structured their estate and their financial planning. So I was able to see documents about the wills they had set up, the trust they had set up, life insurance they had in place, brokerage account statements they may have had. And looking at the brokerage account statements got me interested in investing, just seeing so many stocks coming through. With that, I decided, okay, I know I like personal finance, budgeting, saving money. I didn't really understand retirement and how that worked or even the stock market truly, but I knew that I had an interest. And so I decided to do some research about personal finance and how I could merge that goal. And so with that being said, decided to transition to a career as a financial planner.
And did anyone introduce you to kind of this space or?
Yes, that's actually a good question. I think it was a podcast, honestly, where I saw a Black woman and she was a financial planner. She was a certified financial planner and just talking about finances, but no one personally in my life. Like I knew people who were financial advisors. I personally had a financial advisor when I was thinking about getting started in the business and I talked to him about it. But he's more asset management than comprehensive financial planner, and we could talk about that a little bit more later. But that's essentially my first introduction when I was working with my financial advisor, putting money into the stock market. And that's when I really truly started to get an understanding of this is how your money can work for you and grow for you.
Yeah. And when you first started investing in the stock market, were you nervous at all?
No, not really. And that's weird because I think I started off with a Roth IRA on my own. And I did the common mistake of I opened a Roth IRA with the broker and I was putting cash in there and not investing it in the stock market. So I was like, oh, this is great. This is safe. I'm saving money, but I wasn't actually investing it. And that lack of knowledge contributed to the fact that I was like, okay, well, at least I know that I could put money away because that was a true savings account for me, putting money into a place that I'm not touching and seeing that grow. And when I started investing it in the stock market, I think I started off with some Amazon, Apple fractional shares. There was an old website called, I think it was Loyal3 back in the day, and they let you buy fractional shares of popular companies. That's how I got started. Didn't really monitor it or know what was going on. I'm like, all right, I'm putting $50, $100 in here. We'll see what happens. But talking to my financial advisor about investing in the stock market, he just kind of changed my mindset where he says stocks are the only thing that people don't want to buy when they're on sale.
Ooh. You're gonna stop right there. Okay, cool. That was okay, cool. That's a good alley for me to ask a follow-up question to that. So in terms of like, what exactly does that mean, right? What does it mean to say that stocks are quote unquote on sale?
Correct. So right now it's March 2022 and the market has been bleeding out. When I look at my clients' financial statements, mainly their brokerage accounts or their retirement accounts, for the past year, it's been showing 20% returns. So they've been up. But this year, from January to March, I've been seeing negative 10%. So with the amount of money that they put in, someone might say, I had 10,000 in here in December, and now I only have 8,000 in there. So essentially, since the stock market is at a decline right now, any stocks that you're buying are essentially going to be on sale because it's a lower price than what you would have been able to get it for in December. So I'll use an example. If a stock is $100 typically, and this is not advice, this is just information, but I'll just use a popular company like Apple. So say Apple stock is $100 in December, and then now Apple stock might be $80. People would say, well, Apple's going down, I don't want to buy it. But if you truly believe in Apple as a company, they just had their release today of new phones, equipment. If you believe they're still going to be a good company, then essentially, and their stock is still worth that same value, then you should go ahead and purchase it. But that's just personal preference and how people can decide what they want to invest in themselves.
Right. And I mean, you use a common company that, a lot of people obviously know about. If you have an iPhone, which a lot of people do, it's easy to kind of understand what that company does. But what are your thoughts on just overall dealing with companies that right? Because there are a lot of people that may either be first introduced to the stock market, may not know where to start. But again, you mentioned Apple, but just overall companies that people already use.
Yes, I would encourage people to just look around them to see what companies you're typically using. And Apple's a great example because a lot of people have iPhones. And then I just talk to my client, not necessarily, so to my client, we're doing recommendations, right? But to the general public, I could just say, hey, you probably use Gmail. So that's Google/Alphabet. You probably use Outlook. So that's Microsoft. You may wear Nike tech suits or wear only Nike sneakers. And so that's Nike stock. You might use certain cereal brands and or certain paper products in your house. So you have to look and see if that's Procter & Gamble. So those are just some big examples. I mean, what are some things that you use in your everyday life? And you're like, yeah, actually, let me look them up to see if they're a public company.
Yeah. And two things that I heard you mention as well in the beginning of your journey was fractional shares as well as a Roth IRA. So if you don't mind just kind of mentioning or talking about those.
Yes. So fractional shares and Robinhood actually allows people to buy fractional shares. So I'll use Amazon as an example because their share price is so expensive. It's about $3,000. And they just announced a stock split, which means that instead of being able to buy it for $3,000, you can now buy it for, if you divide that by 20, it's about 150 or whatever the stock price will be when the stock split actually happens. Now, Robinhood allows you to go ahead and buy a piece of Amazon anyway. So even though it's $3,000, if you only have $500, you can still buy a share of Amazon and not have a whole share. That's one thing about the fractional shares, which enables people to actually have access to stock they might not have otherwise been able to have access to. And then it's really good for people who want to invest on a monthly basis because people are like, well, how much do I need to invest every month? And it's literally however much you want to. So we don't have the times where you have to have a minimum. Like some funds have a minimum of you have to put $100 or $500 or $10,000 into it. But now you're able to put $10 a month if you want to into a specific stock or fund and build your wealth that way. Yeah. And the Roth IRA is a type of retirement account where it allows you to put after-tax dollars into the account. It grows in the market. And then once your retirement age, 59 and a half, you're able to take the distributions from that account tax-free, which is really cool because we don't know what the taxes may be. And I'll use this for millennial and under. We don't know what the taxes will be in the next 20, 30 years. And we also don't know how much we may potentially make. So if you're in a higher income bracket, later on in life, you'll be appreciative of taking distributions for retirement without having to pay taxes on it.
But there's a max, right? You only put in so much?
Yeah, so you can only put in $6,000 a year if you make under a certain amount. And so you get fully, what's the word that I'm looking for? You basically can't do it if you make over 140,000, like you're fully phased out. So it's a phase out of if you make this much, then you can only put in like 5,500, 4,500, blah, blah, blah. until you get to, okay, you make what, 140,000 or so, and now you can put in zero.
Yeah. And you mentioned too that like you put money into your Roth IRA, which is good, but the next step, it's hard to make sure you hit that point too. Like, we definitely want people, to open up a Roth IRA if they can, right? But then what's the next step after opening it or choosing a brokerage account?
Yeah, so the next step is going in there and looking at the account summary and your positions. And if you see cash and cash equivalents and it's sitting at $0, or if your entire amount is sitting in cash and cash equivalents, that means it's sitting in cash and it needs to be invested. And so you pick a fund or stock that you want to invest your money into. So you normally can type it in the search bar and you just click trade, buy, and then put however much money you have in cash into that investment. And one easy way for people to know if they have their money invested or not is if they see movement. So sometimes people say, yeah, I put 6,000 in my Roth 3 years ago and it's still at 6,000. If it's invested, it probably would have appreciated or depreciated depending on what the market is, and swings that are more than like $1 or $2, which would be interest.
Right. And that's a good point too. I mean, I never thought about it that way in terms of like, it's amazing how certain things you might feel like are obvious, right? As you spend years investing or whatever. But then if we break it down from like a stage 1 beginner's level, it's like, it still has to be invested, right? Like,
yeah,
definitely good job of opening it. But the next step is, let's, actually invest it.
yeah,
But I
because
want to ask you too about timing, right? And obviously, I'm not sure the age of your clients. But one thing is that money can be made at any age, right? So regardless, but time, you can't get that back. So what would you say to young people that may be interested to start their investing journey?
the time value of money and compounding interest is so important for investing in the long term. It's so much easier to start investing early and just have that money compounding on top of each other. And there are so many studies that show, oh, this person and that person this person started putting $300 a month into it from ages 20 to 30, and then they stopped. And then this person started putting $1,000 a month or something like that when they turned 45. And then the person who started later still could not catch up to the person who started 20, 15 years earlier. That's so there are studies, I'm not sure the exact numbers, but just it's easier for your money to start making money on its own. And the time in the market is the biggest indicator for people our age. And that's harder to say for my clients because it's hard. I show them the illustrations and their plans and say, hey, if you put this much in your 401k, it potentially could grow to this. And I think it's hard to fathom when you're looking at it on a day-to-day basis. Like, yeah, I mean, I put this money in here and it's only grown this much, so I don't really know.
Right. And so, obviously a lot of, folks want to get rich quickly, right? And I always say nothing wrong with that at all. There's a lot of issues that kind of need to be addressed within our community, I would say. And I don't think there's anything wrong with someone wanting to make a lot of money quickly. But do you think mindset, right, plays a huge factor in all of this? Obviously, dealing with money is one thing, the actual currency itself, but do you think a person's mindset plays a factor into all this?
Absolutely. And that's one thing that I talk about sometimes as a financial advisor. I am a financial advisor. I'm not a financial coach. And sometimes I think people may need coaching where someone's meeting with them one-on-one to change their money mindset, to have more of an abundance mentality, to understand their spending habits. Those are probably some of the main factors that I encounter. It's so hard to change someone's habits that they may have already established. And that's why it may be sometimes easier to start with someone who's just out of school, just started with their new salary and hasn't had that lifestyle creep. Because if someone's older and we have to have them cut back substantially in order to save retirement, it may not be feasible because they may have this mortgage, this car payment, these expenses, et cetera. But is there anything that I was missing from mindset that you were specifically thinking about?
No, not necessarily. I mean, like maybe spending habits, maybe environment. I think a lot of it too comes down to exposure as well. Because even though, again, there's a lot of resources available to us, sometimes, you can't really improve too much if everything around you is, not in the area that you feel like you should be or should be.
Yeah.
So exposure a big thing too.
Exposure is huge. And I often ask people when I'm on a discovery call with them, what was your relationship with money growing up? Did your parents talk about it? And I think that also leads to some of the tough conversations, because I am so used to having financial conversations with people on a daily basis and meeting new people, helping them talk about money in a matter of fact way. But it's more emotional than I sometimes let it. Yeah, it's a lot more emotional, because sometimes people can have stories about growing up where they were living paycheck to paycheck, and they're them being afraid of that happening to them, or them being afraid that they're making so much money and they don't want to squander it. So exposure, how they have those conversations with their family members, the conversations they have with friends, potentially being a first generation high earner, and how that affects their family dynamics, being the bank that their family goes to now.
Mm.
Those are all factors.
Yeah. Do you ever deal, and that's a good point that you ended that with, like a lot of first generation high income earners. And going off that, do you ever notice a trend in terms of money and relationships? Like whether your clients are single or married, and obviously not any specific situation, but just like do any of that kind of go hand in hand?
So for not necessarily, I would say one thing I have noticed is that the women are typically more serious about their finances than the men. The men tend to get more serious when they have a long-term girlfriend or they're engaged or married, is what I've seen in my experience. So I'm not saying that's the rule, but what I've seen.
Mm.
Now, as far as people being single versus married, I also see a difference between people who don't have kids and those who do. There's a little bit more urgency with financial planning for those who have a family, because now they're thinking, oh, if something happens to me, is my child set up? So that's another thing I typically see when it comes to financial planning. So those are the main factors. But as far as relationships, I have seen a lot of times the wife be the CFO of the relationship. So that's so interesting to me. Being a woman, I love that. I see a lot of dual income households that are high earners.
Mm.
And so that adds another layer to it, because they're able to save a lot more, have a lot more disposable income. I think the relationship piece also ties into it, because people are starting to think, okay, now if we're thinking about a serious relationship together, now we're merging finances. We want to make sure we're on the same page and aligned. Or even heard stories of people saying, I don't want to bring this to their doorstep when it's time for us to get married. So I want to try to figure out a plan to eliminate debt before we move to the next step. So those are some of the things that I see.
Yeah. And a lot of people talk about, talking about investing with your children and family, but how do you feel about having that conversation in terms of like with your spouse or significant other?
Oh, I think that's very important. And I'm not sure where that came from, but if you think about having a future with someone and marriage, one of the reasons why marriages don't work out is finances. It is important to talk about, are you a spender? Are you a saver? Are you an investor? Should we have separate finances? Should we combine our finances? Those things really go into how the couple works. I personally talk about finances in my relationship. So we'll go into detail about, this is how much this costs, or this is what we should plan for. This is what we're paying for, having an idea of people's boundaries when it comes to our money and our finances.
Mm-hmm. Yeah. And I mean, I bring that up now because, with social media and, us living in 2022, there tends to be a lot of, glamour and stuff, right? And there's, again, nothing wrong with that at all.
I
Someone who's dealing with actual seeing the numbers and stuff, as opposed to, social media numbers. I just wanted to kind of hear your thoughts on just overall relationship among money as well.
Okay, wait, could we repeat that? So the relationship among money with social media?
No, so like basically on like there's social media norms, if you will, in relationships nowadays, right? Like there's certain things that you might see on Twitter and Instagram where people will feel like the man should do this or the woman should do this. But in reality, if it's your relationship, it's also your money and your personal situation.
Yeah.
So do you feel like, I guess there's a right or wrong answer to how a couple decides to deal with their own personal financial situation?
Oh, I do not think there is a right or wrong way to deal with it. So if the husband wants to take care of the mortgage and the wife pays all the other expenses, or they split the check when they go out to dinner, or say the wife makes more, so she's going to be taking care of most of the meals or the expenses, it just depending. I support whatever people choose for their household. It's like, as long as it works for you, then I'm on board with it. So, and I don't even think that I go into detail about that when we're doing our cash flows. Like, we have an idea, like if I'm meeting with one spouse separately, then I'll know what their expenses are, but I don't really put too much thought into like, oh, wow, they don't pay this bill or they don't pay that bill. I'm like, okay, well, these are your expenses, so we'll plan for this and we'll organize that accordingly. Or if we're doing one together, I'm not thinking like, who pays this, who pays that? I just say like, what's the household allowance for this? And then what's the household expense for this? Not necessarily saying who pays for it.
Right. Got you. Okay. And talk to me too a little bit about taxes. That's the one word that a lot of people, myself included, hate.
You thought
But
I
it is
cringed.
it's it's, as of this recording, it's tax season, right? But so obviously we talked about the Roth IRA, but is there anything else that you might feel people should at least know about?
For taxes, you have a lot more flexibility with how much you can save on taxes by being an entrepreneur and a business owner. And sometimes I have people come to me, they're W-2 employees, and they're like, what can I do so I'm not paying so much in taxes? And we really, truly don't have much flexibility unless they're doing itemized deductions. And even that ends up sort of being capped. Is when you own the business and you're able to take deductions on typical everyday things that people may be doing. For example, business owners can deduct their business meals, and this year it's 100% instead of 50%, as long as you're dining at a restaurant, in order to support restaurants that were affected by COVID, people not dining out. They're able to take home office deductions. So your regular W-2 employee isn't able to deduct their home office use that they're using for remote work, but entrepreneurs can, as long as they have a space that is exclusively used as an office space. They're able to deduct utilities that are for that percentage of office space, any furniture they're putting into the office, gas for going to appointments or for business purposes, even some car expenses for business purposes. So you have a lot more flexibility on the income and expenses that you're able to, well, not the income piece, but on the expenses that you're able to
Right.
report.
Yeah. And so what if like someone made expenses, I guess, during 2021 and they didn't have an LLC or didn't have the formal business, but they waited till next year?
Yeah, so the cool thing is that you don't necessarily need an LLC to report that business on your Schedule C. It's nice because it's separating it for business structure so that you're not held liable for if someone wants to see your business, et cetera. But as long as it's not a hobby and you're making income from it, then you could put that on your Schedule C. So someone could sell hair, for example, and have that business. And as long as they're receiving income and have expenses related to it, they can still file that on their taxes, even if they don't have a Schedule C. But for good business structure, you want to make sure you have a separate bank account so that you're able to track everything. So if the IRS has questions, you can say, hey, this is my business and it's completely separate.
So it's two separate, you're saying?
Yes.
Okay. And yeah, I mean, again, like I said, I just have to ask, considering the times that we're in. And I'm going to ask you this as well. And again, if you don't want to answer this, you by all means, you just let me know.
Okay.
How do you feel about someone's approach to possibly not using an accountant when they file their taxes, or if someone wants to use a different app or platform, or example, TurboTax? Do you think that it's better to, go the official route?
I think it depends on what you have going on with your tax situation. For W-2 employees, if you only have a W-2 and you're probably doing the standard deduction, it makes sense to just go ahead and do it with TurboTax because it's so easy as plugging in a couple of numbers. But when your return gets more complicated, there could be deductions that you're missing out on. And so that's for people who have businesses, right? Or if they're just looking to make sure they're not missing any deductions, they may have brokerage statements coming in where they may not understand how to report it correctly. If you want things to be done properly, then absolutely finding an accountant to do it so that you take the stress off of wondering, am I doing this correctly? Am I reporting this correctly? And then am I getting the right amount of deductions? Because by thinking you're saving money with TurboTax, you might actually be paying more in taxes than if an accountant looked over it and realized, hey, you could have grabbed this deduction for your business or child tax credit. They may have a better understanding of it.
Well, what happens if people don't pay their taxes? Or like what's, have you ever dealt with, obviously not a client, or I would hope, that's not an issue you have to deal with, but like just the idea of, delaying it or putting that off to the side because it's not something that, everyone may actually know about.
Yes. So I used to wonder that, like, how do people not
Yeah.
pay their taxes? But it happens, and it just depends. So if the IRS knows you owe them money, they're going to be hunting you down for their money. If you are owed a refund, the IRS is kind of like, well, you didn't file your taxes, you were due a refund. So then that's when you have to say like, oh, I'm missing out on this money. But generally, I'm not actually too sure or well versed on the tax, like the penalties of you not filing, and other than them taking you to court and saying, because we see those stories about the celebrities, like the IRS comes for them and say like, hey, you have this tax lien, we are going to start seizing your assets until you pay us the money that we are owed.
Yeah. And do you feel too, do you feel that it's a good or bad thing to receive a tax refund? I hear a lot of mixed opinions on that.
Yes, that's a good question. I am of the camp that when the IRS owes you money, that means that you gave them an interest-free loan. However, it doesn't necessarily mean that you did something wrong, because you could have had something happen in your tax situation during the year. But typically you get a tax refund because you withheld too much on your taxes in a paycheck. So that money could have been working for you. And I'll use this example of someone gets a $5,000 tax refund at the end of the year, and they're not a parent or anything, so they're not getting the child tax credit or any other credits. So if you I'll use 6,000 as an example because you easily divide that by 12 and say $500 a month. Imagine if you could have just put that $500 a month into the market and had that working for you, or using that to pay off a bill and not put something on a credit card, versus getting one lump sum of $6,000 a few months after the IRS owed you. Because if it's what they owed you from 2021 and you file your taxes in April and then they get it to you in October, it's like you spent 10 months and they didn't pay you a dime for having your money sitting in their escrow.
Yeah.
Yeah. How do you feel?
Hey, I'm the host. I'm the host. So no, I don't believe in tax refunds, or let me not say believe. It's just I'm more of the same mentality of you just gave the government an interest-free loan, and if there's anyone that I wouldn't want to give an interest-free loan to, it's the IRS. They already take enough money as it is. It doesn't make sense to kind of give them more. They're the last group of people that need a loan. But yeah, that's just the way I see it. But again, at the end of the day too, if someone is given a refund, right, or if someone is given an unexpected check, naturally, right, you're going to be excited. But I asked you that question so that we can see the bigger picture, right, and zoom out on what that ultimately means. And again, like you said, it all depends, right? It all, it's not necessarily just black and white like that. But
I think the flip side, though, is if people owed the IRS money, they would be pissed because they're like, why do I owe them money? They've been taking taxes out of my paycheck all year, and now I still owe them money. What is this? So I think it's easier for people to digest, oh, I'm getting a huge check, versus now I have to cut the IRS a huge check, which means, you can just put it off until April 15th, right? And say, all right, I'm going to pay this. So I have my money working for me until the last minute. But that also means that you had to do planning beforehand to have that cash available. So some people may not have the financial strength to be able to make that kind of payment. And so a payment plan would then be in place versus if you just got a huge refund and now you can spend that on whatever you want.
Yeah. But I think if you're in that position too, I feel like you definitely have to know what you're doing and move in a strategic way. Like
Yes.
I think there's loopholes in a lot of different situations. But if you don't know, or if you're not familiar with it, then, either make sure you do your research or just stay away from it completely, in my opinion, just because, like
Yeah.
I said,
Yeah.
it's doable, but it can hurt you if you're not familiar with it. But another one too is student loan interest, right?
Mhm.
And obviously now with there not being certain interest on certain student loans, but usually that's another one, right? Student loan interest for people.
Yes. Student loan interest is a big one, depending on the interest rate. So the public loans, I think, have been ranging. Actually, I'm not sure the interest rate, what they currently are. They change it pretty much every year, but right now they're 0. And that's another one, just seeing the stories where people talk about, I started off with 40,000 in loans and now I have 60,000 in loans because of interest. And it just feels like an uphill battle in order to pay them off.
Mm-hmm. Yeah.
Yeah.
And how debt that has 0% interest, I like to have, or just talk about this and just overall, pick people's brains, just hear what you think. Debt that has 0% interest versus investing in the market, or anything really, 0%
Mhm.
interest debt or investing. What's your thoughts on that? I won't say what's your belief, but what's your
Mhm.
what's your what's your opinion on that?
I personally take advantage of 0% interest and utilize that for my cash flow. And I'll use an example. I'll finance something at 0% using a firm or something like that for 18 months. And so my monthly payments are X and I don't have to pay interest. And then that way I'm not putting a huge bulk of my cash onto this thing. I do have it increases my monthly cash flow, of course, because now I need a lot more money to pay my bills just because of if this payment is $100, that just increases my fixed expenses by $100. But instead of putting 2,000 on something and being out of 2,000 in cash, I can just have that money sitting in the market making more money for me. Not right now though, but in theory.
Listen, fortunately, this is an evergreen episode. So, years from now, people can watch this and say, absolutely. But, right now, obviously,
Yeah,
yeah.
I think the most important thing about the 0% financing is trying not to get caught with your pants down, because the 0% financing credit cards where people are like, yeah, I got it, I put something on it. If they're not paying money on it every month in order to get that balance completely paid off by the time the promotional period ends, they can get caught with their pants down. So I have something $2,000. I'm going to put it on this card. It expires in 18 months. If they say, I'm not going to pay on it until it's due, but say your car breaks down at the same exact time, the card promotional period ends and you have to make a decision, and then you end up paying the interest. So that's something I typically say, like, hey, make sure you have a game plan behind paying that off so you don't get caught.
Right. And again, game plan, all of this is really perspective and just, make sure you have overall strategy. So it sounds like you're was it team credit over cash? Is that safe to say?
Yes, having my money work for me, yes, or having my credit score work for me, essentially, where I can not have to put my cash on things or take out loans against myself with my investments, for example. So people can do that with whole life insurance. Have whole life insurance, it's growing. They take that accumulated value and take it to the bank and get a loan out against themselves. You can do that with your stock investments as well. And so essentially, you're able to save yourself money, you're paying yourself back, and you're not selling and incurring capital gains by doing that.
Yeah, so that is a perfect segue. I mean, we talked about investing, we talked about taxes, and now we bring up insurance. So I feel like, life insurance, or at least whole life insurance, may be one of the biggest hacks out there, in my personal opinion, in conversation. So do you feel that everyone should have life insurance?
Yes, I do feel like everyone should have life insurance outside of their job. I guess I'm biased because I'm an insurance agent as well. I am a licensed insurance agent. I'm able to sell life insurance to people. But I think it's important just because of the health aspect. I see the underwriting horror stories of people getting rated or declined. And so I say, like, hey, just get it while you're young and healthy. And sometimes people are like, well, I don't really want to have life insurance because I don't plan on having a family, or I just want to be cremated when I die. I don't necessarily need it. But just to avoid, just to avoid GoFundMe's or that's a big one, avoiding GoFundMe's or building generational wealth. So I have seen that people are definitely, a lot of my clients are like, I do actually know I need life insurance. It hasn't been a priority to me. So let's just go ahead and secure it. Term versus permanent life insurance, it gets a little iffy because permanent is so much more expensive. And so I can see how people are like, that's not a huge priority. But then when people are older, they realize, oh, I had life insurance with my job. I don't work there anymore because I'm retired, or my term is ending. If they haven't built up enough assets, then the whole life insurance, you may have already paid up your policy and you just have this asset that is, when you pass away, you could be 95 years old, you'll pass down tax-free money to your beneficiaries.
And there goes that word again, tax-free. So I gotta, again, combine the two, the tax and insurance. So what are I guess, specific benefits between, term insurance and permanent or whole life insurance?
Yeah.
Obviously the glaring and obvious one is just having something for when you may pass away.
So term life insurance coverage, most jobs offer it as a benefit and pay for it. Typically, I see it's 1 time your salary, sometimes more, sometimes less, but generally that's what I see. So the tax-free benefit, but then term life insurance outside of your job, you get it for a low price. Someone who is about 30 years old and a woman can probably get it for $30 a month if she wanted $1 million of coverage. And people are like, oh yeah, that's a lot of coverage for a low price. So that's an example of term life insurance. But did you have a question?
Yeah, I was gonna say, I'm sorry. Why'd you say a woman in that example, if you don't mind me asking?
Yeah, that's a great question. So men, life insurance is more expensive for men because they are more susceptible to dying earlier. So life insurance for men is more expensive than women if they're the same age. And then in the reverse, or on the flip side, long-term care, which is insurance for people who may be elderly and going into a nursing facility or need home health care, it's more expensive for women because they typically outlive men.
Okay.
Yes. So term life insurance, you get a lot of coverage for a low price. It's great for people who are young and don't have a lot of cash flow. It's great for families if they are just starting out in their income earning years. And if something happened to either parent tomorrow, they still have 20 more years of raising a kid, for example. And then permanent life insurance, term typically expires. So the insurance company is betting on the fact that you will actually outlive it because most people do outlive term life insurance. Permanent life insurance, you typically pay more for it because it lasts your entire life as long as you pay up the policy. And this is the generational wealth building one, because if your grandparent had a whole life insurance policy and they pass away at age 90, you would still be able to get some money from that. So that's why whole life is beneficial. And it has the accumulated value where people are like, I don't like insurance because I put my money into something. If I don't die early, then I would have wasted all that money. And whole life insurance basically ensures that you're not doing that. You're putting money into a policy and it's building up your value of money, cash value that you have access to leverage or take distributions from.
So is permanent and whole the same?
Yes, permanent life insurance and whole life insurance is the same.
Okay,
There are
different words.
Yeah, so permanent life insurance, there's whole life insurance, which is just standard, tied to a general account, so not tied to investments or anything like that. It's generally a cash account. There's also variable universal life policies, index universal life policies. So sometimes you can have life insurances tied to the stock market. So there are different types of permanent life insurance underneath that umbrella.
Gotcha.
Yeah.
Once you what is it, pay that off, I know the term obviously ends after a certain period, but with permanent or whole, do you pay like for like, what is it? What is there like a specific number of years, and after you do, like you're good for the rest of your life?
Yes. So for whole life, that's what you can do. Like you can have a policy where you're paid up until age 65 or paid up until age 100, which that seems a little daunting, but you can cut it off beforehand. Term life insurance, if you don't pay for it, you lose your coverage.
Yeah. Got you. Okay, but either way, right? The younger a person is and the more healthy they are, the cheaper, right? Relatively, speaking, it is.
Exactly. Yes.
Okay.
And if you don't smoke tobacco,
say
that's a big one.
Say that part again, please.
If you don't smoke tobacco, which is actually interesting because I wonder, does hookah show up in the urine test? Hookah has a hold on us.
I was gonna say.
You're like, oh, we had.
I wasn't gonna say anything. I was gonna say a word. But I'm like, for my people's sake, I really, really, really hope not.
Yeah.
And that's a serious thing and a serious unfortunate issue. But even still, like the slightest adjustment, I would say, to your health can change everything, right?
Mm-hmm.
So like, let's say you got an issue with your eye, you put that on your physical or medical form. If after you get your life insurance, again, correct me if I'm wrong on this, but after you get your life insurance, if you get something else that gets worse to your eye, it doesn't, like, it's not the same, right?
Exactly. You're basically it's like the pre-existing condition.
Okay. Yeah.
Yeah. So if you have a pre-existing condition, so you want to get it when you're healthy, because I'll use cancer, as horrible as it is, as an example. If you get life insurance and you're 25 and super healthy, you can get locked in at a rate that is really great based on you having premier health. If you have breast cancer 5 years later, if you would have tried to get life insurance after breast cancer, you may have gotten declined or heavily rated. So by you getting it early, then you can worry about that. I sometimes hear people say, yeah, I realized I needed life insurance after I was diagnosed with cancer, but now it's too late.
It's kind of heavy, but
Heavy, yeah.
No, I know it's needed though. It's needed though, because again, I think, sometimes people might wait, but I didn't know you can get denied.
Oh, they sometimes deny people for, say, we won't offer you coverage. Yes.
Wow, getting denied for a house or a car. Okay,
But,
whatever. There's more out there, but
yeah.
getting denied for life insurance.
Just depends on if you have a pre-existing condition where they're like, hey, we think that you're a little bit more susceptible to dying within the term.
Right.
So, yeah.
That's okay. So let's talk about, I guess, babies and youth, right? That maybe that will lighten up the mood. What is there a minimum age for, like, I guess, someone to get life insurance for their children? Or is that like do people kind of build that way?
Yes, you can get one for your child as soon as they have a social security number. That's a fun fact. I had a client, he got life insurance on his baby. He was like, all right, my baby was born last week. Let's get this life insurance set up for them. And the permanent life insurance is a lot cheaper for kids, and they get to keep it their whole life. So you're essentially gifting them a gift of locking in their insurance at such a young age and building up cash value while it's cheap. And so we were like, oh yeah, all we need is the social security number and we're good to go. So that's one way to build wealth for kids, is to have, it's essentially a savings vehicle where you put money into an account every month and it grows. And of course, oh cool, they get life insurance coverage, but that's not really how we position it to clients, because it seems morbid. Like, we don't want to think about something happening to our kids, but a savings vehicle where you're able to put money into this life insurance policy for the benefit of your child.
Right. And can you have both? Like, can you have like one or the other, or like?
I have both. I have term and permanent life insurance. And the reason why is, so Northwestern Mutual allows your life insurance to be converted to permanent life insurance. So we talk about locking in your health. Someone might say, hey, I want permanent life insurance later on in life. Don't necessarily have the cash flow for it now. It's like, okay, cool. We'll start with term and switch you over eventually. So I have a lot of term because I want a lot of coverage and flexibility and locking in my health. And then I have permanent in order to build up my cash flow, or my cash value rather.
Hmm. But so is it, on the permanent front, is it more kind of like an emergency kind of thing? Like you use it if you need to, or?
Yeah, but it takes time to build value
Mm.
separate from an emergency fund. So mine does not have enough value to cover 3 months of expenses. So that's why I don't necessarily use it as a vehicle where I tell people, hey, you can have money from this, unless we're overfunding it. And that's a whole other thing. But overfunding it essentially means that you're paying more into it than what the life insurance death benefit requires. And so as a result, the value of the policy is building faster. But the typical whole life policy is not building value as quickly. And so you need cash in other places. So emergency fund is step number one, typically, for the financial plan.
Yes. And obviously, I think, I don't know if we were recording by the time we said this, but like, and try investing with $0 is very challenging. So like having an emergency fund is definitely important. I don't like to rank certain things and level of importance, but that's probably up there. You need to have something for you in case something crazy happens. But do you have any even as an advisor stuff, do you have any financial regrets?
Ooh, that is heavy. That's heavy. Oh, I don't think anyone's ever asked me that. Do I
Thank you.
have?
I take that as a compliment.
Yeah, that's a good question. No, knock on wood. I've taken some. I had saved up $10,000 in an account when I was working in public accounting. And then I took that money and went on a sabbatical and spent it down. Then I got another job and put more money back into it. So I don't regret that at all. I think common regrets that I see for people are like getting into a lot of credit card debt. Medical debt, for example, that's something people can't avoid, but the credit card debt, like, oh, I should have never got this credit card in college and spent it up because now I feel like I'm in a hole. So that would probably be my answer. No financial regrets. And another one I could have had, I'm talking about woulda, coulda, shoulda. My parents were great to bounce ideas off of to make sure I don't make those financial missteps. But when it was time to go to college, I had a full ride to one school and then no scholarship money to another school. And I wanted to go to the other school just because it was the state college and all my friends were going there. And I just thought it would be more fun. And I didn't want to go to the school that offered me scholarship money. And then my parents were like, well, that's dumb because you'll have student loans versus not. And I didn't understand the concept of it when I was in high school. I was like, yeah, whatever, I'll take the loans. It's whatever. I'm going to where I want to go to school, not understanding how crippling that could have been for me in my 20s. And so luckily my parents refused to allow me to put in my letter saying that I wanted to go to that school, went to my school where I got a scholarship. And so that could have been a huge financial regret, but my parents talked me off that ledge.
Are you thankful they made that decision?
Oh, yes. I was so upset when I was in high school and they were denying me going to my dream school. But in hindsight, I'm so grateful, especially when I see how crippling student loan debt can be.
Yes. It's they may, let me not even say may, but there's talks of them canceling student loans, but who knows?
Yeah, that'll be ideal.
Yeah, we'll see. They've been talking about that for years now. No, you can hear a lot of like rumors and things like that, but it is what it is. But in all the years that you kind of worked in the finance industry, right, in this space, have you seen a lot of Black people?
As financial professionals?
As financial professionals, yeah. Have you worked with a good amount of them at all? Have you seen them kind of within the space?
I will say that I have always gravitated towards the Black networking ones, so like National Association of Black Accountants. There's the Society of Black CPAs. Within Northwestern Mutual, I worked in the Atlanta office, and now I'm in the DC office, both huge presence of Black advisors. So I've been blessed. But then when you look and see the actual demographics of the financial advising space, you realize that we truly are such a small percentage of it. So it can seem like there are a lot because I know them. It's like, oh, I know 10 guys here or 5 guys here. And then that's not the reality of it. And then when I was in the public accounting space, I think that's probably where it was most striking, that there was not a lot of diversity. Once you got above a certain level, in order to become a partner, it seemed like you were trying to climb a huge mountain in order to qualify yourself, in order to prove that you are qualified. So I just was redundant, but isn't a lot to prove that you were qualified to lead an organization. And then as a Black woman, I think that's another hurdle, not to just, I mean, it is International Women's Month, but I think there is a uniqueness that I know a lot of Black women want to work with a Black woman for their finances, but I sometimes do wonder I do sometimes wonder if people subconsciously think men are better suited to handle finances. That's something I'm trying to navigate and figure out myself.
Do you feel though that with, obviously going off that answer, that there's anything that can be done to continue to build that level of trust?
As far as being a woman in the financial space?
Yeah.
As a woman, I personally, I'm not saying this is every woman, but I just feel like I have to come with the credentials. I put my signature, or in my signature, I put my credentials so that people know that I know what I'm talking about. I think there's also another layer of women coming in and being more intuitive when it comes to finances. So that's a benefit that I may have, but definitely imposter syndrome when it comes to being a financial advisor, feeling like I need to have all of the letters behind my name to compete with someone who may not have any. And no shade to someone who doesn't, but that's pretty much how I feel like I have to do twice the amount of work in order to get the same qualification, not the same qualification, but twice the amount of work in order to get recognized on the same level playing field.
What would you say to someone that's trying to become or looking to become a financial advisor or a CPA? Is there any thing you would tell them?
It's very important for us to be, if I'm talking to a Black person, I would say it's very important for us to be in this space, just because the financial advisors, I know there are only so many of us, and there are so many people who need to have access to us. So what we do is so important. And people have conversations of maybe not feeling comfortable talking about finances with someone who isn't able to relate to them. Building that trust factor, maybe if your advisor is your same race or comes from the same experience, or even likes to do the same things that you do on the weekend. So when I talk to some of my clients, it's like, we may have been at the same concert, or we may have been watching the same show. So sometimes I'll talk to people like, hey, did you watch Snowfall last night? And those aren't conversations that you may always have with people, but it's a lot of work to be a financial advisor. I spoke about the emotions behind it, talking to someone about something as vulnerable as their finances. This may be the most vulnerable conversation they have this week, and taking that layer off, it could be too much. And it's like you go into this place of panic, like, what do we just do? And then as far as being a CPA, the CPA is valuable, because I remember when I was working towards my CPA and I was working in tax, I felt like I was pigeonholed and I could never get out of the tax space. And I was so upset, like, oh my gosh, I wish I knew that tax is so hard to get out of, and audit is the easier one to basically maneuver within different companies. Like, you start an audit, you can just go and do corporate accounting or work for audit at a corporation, et cetera. But I'm so grateful for the tax experience that I have, because that gives me a leg up with the financial planning, since I know the tax strategy behind some of the plays that we're doing as well.
What made you decide to keep going though?
What do you mean? And as far as
that, like in terms of dealing with the tax and overall that kind of portion of your journey?
Well, luckily I don't have to touch taxes in the detailed way anymore, but I still offer some tax strategy and try to read up on it to make sure that but I'm still telling people like, hey, people like, can you do my taxes? Can you be my CPA for my tax side or my business? And I'm like, oh, no, I'll direct you to someone. Like, that's not my lane anymore.
No wrong being a plug. No wrong with directing people where to go. No wrong with that.
Yes. But then how do I keep going? Write down my purpose, write down my why. If I'm having a really bad day, I'll talk to my parents or reach out to other people in my network who may, other advisors who understand how difficult what we do is. And it's the good conversations that make it rewarding, when people are thankful for what I do and appreciative, when people refer me out to other people. And those are really, and I realize I'm making an impact, or just me doing this, so many more people are prepared for retirement or comfortable, confident even about their finances, have insurance in place, have that emergency fund, are able to buy a house. And so that's what's gratifying for me.
Right. And that's very important too, like overall impact, and just having these conversations with people who may be having them for the first time.
Yeah.
But so even with them, right, we talk about emergency fund and overall financial planning. What's let's say 3 things that you may tell someone that's getting ready to start their financial journey? What's 3 things that, and it could be a habit, it could be obviously we won't say open up, or if you want, say a account. Just 3 things you feel like every, I'm gonna say, I don't care, every Black person should know about money and just overall mentality towards it.
Uh, don't be afraid to invest in the right thing. So of course, seek out an advisor or someone you trust to figure that out. Have an emergency fund is key, and have life insurance.
Yeah. Okay, love. Yeah. No, honestly, yes.
Shameless, I guess. Like, oh yeah, I do investments, I do insurance. Shameless plugs.
Hey, absolutely, nothing wrong with that at all. And so that kind of leads me to the final question that I have for you, right? We talked about overall income, I mean, impact, as well as income, tax strategies, emergency funds, investing at an early age, starting as soon as you possibly can, your overall journey to hear how you got started, right? With even investing in certain companies, with fractional shares, the Roth IRA, and now, I believe you made the transition towards, investing that money, and just overall helping people, right? So that leads me to the final question. Is a question I ask everyone that's been on Define Your Legacy. And that question is, how do you want to be remembered?
How do I want to define my legacy? Oh, I want to be known as authentic and genuine. So a Black woman financial advisor, shattering glass ceilings within my profession, but I never want to lose sight of helping people and truly wanting to give back. And so that's how I want my legacy to be, for people to remember me, like she actually truly cared. And when I hear people say like, I've watched your Instagram video and I could tell that you actually truly love what you do and are truly trying to help people. That's what I want my legacy to be. It's not for internal gain. I do like to make money, yes, but I truly feel as though my impact is how many other people I can help.
Mm, mm. And that's real. That's real. Just helping people can make you, really feel good, and just the overall value that you provide.
Mm-hmm.
But yeah, I would say definitely, thank you for being on the show. I know I can speak on behalf of the people that listen to this episode. It was definitely appreciated. But if you don't mind, either drop your social, or where people can find you, your email, your LinkedIn, or whatever works best for you.
Yeah, so let's do the rundown. So I'm on Instagram at Adrienne Davis CPA. So it's spelled ADRIENNE. My email is adrienne.davis at nm as in northwesternmutual.com. My website is adriennedavis.cpa. And then my LinkedIn, you can find me Adrienne Davis CPA. And I think that's also my handle, Adrienne Davis CPA.
Got you.
Yeah.
And if you could, are there any final words you want to leave our lovely audience of Define Your Legacy with? Any final words?
Um, I would say don't be afraid to reach out to a financial advisor. That's probably it. That sounded so not polished, but don't be afraid to
Yeah.
to a financial advisor and get a financial plan. Your future self will be so thankful. And yeah.
Yeah,
We
no,
cut,
hey,
to cut
that's good
that.
enough. That's good enough. I think it's tough to have conversations about money with maybe your friends or anyone new, but to someone who obviously has experience and their job is literally finances, it might make things a little bit easier for people. Because, again, a lot of this stuff in the beginning, it might be just you, right? It might be just you as an individual. It's almost like, therapy, right? You go and see a therapist when you need help. So if you need help with money and things like that, maybe a financial advisor might be a good fit for you.
That's such a good example, because I think people are afraid to go to therapy for the first time. And then when people finally do go, they're like, oh my gosh, it was just like, I'm so grateful that I took this step.
Yeah.
Yeah.
And the amount of, I think people may not put enough credit on information, and just like what separates a lot of people really is that just the education behind a lot of things. I think once you become informed, your life kind of changes drastically. And so don't be afraid to kind of utilize the services of a financial advisor. We utilize the services of so many other people, right? When you go to a restaurant, you go and chefs and whatnot make food, right? You go to a barbershop, they cut your hair, so on and so forth. So I think financial advisors kind of work the same way.
Yeah.
But yeah. So for the Defining Legacy front, y'all, make sure you follow Defining Legacy on Instagram, as well as Twitter, Facebook. Subscribe to Theus Elijah on YouTube and even TikTok. Make sure to give Defining Legacy a 5-star rating on Apple Podcasts as well as Spotify. All right, and check out the link in the description of this episode for the online store. And just like that, Adrienne Davis, we appreciate you for being on the show.